Hey, Market Chameleons. Thanks for joining us. How you
Good
doing,
morning,
D?
everybody.
Good to
Hey,
see you.
Will. Good
How's
morning.
everyone
Good morning,
doing?
everyone. Thanks for joining us.
Hey, thanks for
Uh,
coming in, everyone. Listen, before we get started, a little groundwork. Just put your questions in the chat if you have any for Dmitry. We're also streaming on Zoom. That's the connection between where we're doing the broadcast and YouTube Live. So I'll put a link in case your screen's funny and fuzzy. That is, it happens sometimes. We're also doing a Basic of Options series Monday webinar, 6 p.m. with the man to my right or left, Dmitry. He does a great series on how to, the basics of options. So I'll put a link to that in the chat as well. With that, let's get started, D. Where should we start?
Okay. Well, you want to put the
disclaimer.
disclaimer up first, and then we'll get started. So Will's going to put this up really quickly, everybody. Keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, then go out and seek a registered investment advisor or call your broker. They should be able to help you out. There's this disclaimer, everyone. So then we could just kind of get started.
Nice
job.
Let
me share my screen. Thanks, Will. And as usual, I'm going to just look, we're going to go over what's moving in the pre-market hours today. Then I was thinking of covering some earnings, upcoming earnings, maybe looking at the unusual option volume from yesterday, maybe screening out for some credit put spread ideas. I don't think I've done that before, maybe even looking at some open interest and answering questions. So I'm going to try to go kind of quickly today just to cover more bases. If we have questions, I'll just slow down. So this is the pre-market report. It's showing stocks that are trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. And usually we just kind of start looking at the biggest gainers and doing like a price action analysis from a historical perspective. What tends to happen to the stock after a big gap move. But before we do that, let me just see if anything is going on in like the higher market cap stocks. So I see here, AMAT, that reported earnings, it's up 3.3%. Tesla, that's up another 3% today. I don't see any other like really big movers here. Not much going on today. Fridays are usually a little bit quieter. Let's come back to the report, and I see the first one up here, TLC, that's up 140% in the pre-market hours on 1.2 million shares. This is a small market cap stock, 203 million. There's some news on it over here. It looks like some biotech stock, some COVID-19 related news. So let's just take a look at that one really quickly, see what's going on, what's trading in the pre-market hours. Then we're going to take a look at how did this stock tend to behave after a large move at the open. Here we see yesterday, see here, biotech stock, TLC, yesterday closed at $5.11. Right now, it's trading $12.02 in the pre-market hours, which is up 135%. Here we see the high-low in the pre-market hours, $579, $12.80 on 1.2 million shares. This is hot 52-week low and high, $2.48, $12.65. I'm coming down here. This is the pre-market chart, how it's been moving in the pre-market. So you see very volatile, very choppy, low cap stock. That's going to happen. So be careful out there, guys. Longest VWAP bar I see right now traded between $11.80, $12.34 on 443,000 shares. Down here, I'm just noticing a really quick observation that VWAP in the pre-market is $10.90. The standard deviation of the minute-to-minute VWAP is $1.62. It's telling me it's very, very volatile. So you could see here minute-to-minute statistics for it. Over here, you could read this. These are news related to the move today. I'm going to let you do all that interpretation as a trader. You could read through it and figure out how to interpret that news. I'm just looking at it from a price action analysis right now. let's take a look at what the stock did or tended to do after a large opening gap move in the morning. So over here, we have in the last 3 years, these are the 12 largest gap moves in the stock. Here are the dates. And, if there's any kind of news related, you could kind of hover over that, take a look what was the catalyst behind that move. So we see here the average gap of these 12 has been 10.4%. I see a high of 25.7% over here on March 20th. So here, way higher than anything, at least we've seen in the last 3 years, 135%. Keep in mind, there's some kind of news out there related to COVID. We've been seeing a lot of these, COVID-related biotech news being big gappers in the morning. So let's see what did the stock do after the opening. It gapped up in the last 12 quarters. From the open to the high of the day, the average move was 8.1%. Here's something interesting that 58% of the time, so 42% of the time, it moved higher from the opening price. 58% of the time, that opening price was the high of the day, as you can see here, and then it moved lower from there. From the open to the low, the average move was 6.5%. From the open to the close of the day, it tended to drift lower more often than higher. 75% of the time, it closed lower from the opening price for an average loss of 2.9%. Here's the volatility intraday from the open to the high, plus or minus 8.3%, from the open to the low, 6.5%, from the open to the close, absolute average move 6.6% with a high move of 20.6. So you can see here, it can move a lot even after the opening. So we'll see in this stock, obviously there's some news there. You could take a look at it, see, if it what it warrants. If there's no questions on the pre-market, Will, I'm going to go then kind of jump right to the earnings, because I wanted to cover a couple more screens today. Okay, so over here, let's take a look at, these are earnings coming up in the next 2 weeks. So we're going to look at it from the perspective of the options and what are the options predicting the move. We're going to compare it to the historical average moves, see how far away that's from the historical mean. So I'm going to filter out this is a list of stocks expecting to report earnings in the next 2 weeks over here. I'm going to filter out, let's just look at stocks that on average trade at least 10,000 contracts, option contracts per day. So something that has, a lot of option contracts trading, a lot of activity. And let's take a look here. This one's reporting already before market open. So let's take a look at what's coming up. I think here's Home Depot. That's expected August 18th before market open. Right now, the expected up or down move, remember it's looking at the straddle, buying a call, buying a put at the money of 4.2%. That compares to a historical 4-quarter average move of 3.4% and a 12-quarter historical average move of 1.8% with a high move of 5.4% in the last 12 quarters. Walmart also same day reporting August 18th before market open. That right now is expecting a move up or down 4.9%. That compares to a 4-quarter average move of 2.5% and a 12-quarter average move of 4.1%. So you can see 2.4% above the 4-quarter average, 0.7% above the historical 12-quarter average, high move in the last 12 quarters, and that is 10.9%. Alibaba, that you said there was a question on Alibaba, Will?
Yeah, someone was asking about the BABA earnings in the pre-market chat.
Okay, so here Alibaba expecting August 20th before market open. As of yesterday's close, the straddle is implying a move of 8.9% in either direction. That compares to a historical 4-quarter average move of 2.7% and a 12-quarter historical average move of 3.1%. So we can see here, that's 6.2% above the historical 4-quarter average, 5.8 above the 12-quarter average. High move on that in the last 12 quarters, 6.3%. If you want, I could just go to Alibaba. We'll do, since there's a question there, let's just take a look at how that performed historically. So here's Alibaba from a historical perspective, that the options overestimated the move 77% of the time, last 12 quarters. The average of the implied moves before the day before earnings was 5.1%. The actual absolute average move of the stock was 2.9%. So you could see there like a 2.2% differential. Here, these are the bars. That's what the implied move was, up or down for the last 12 quarters, versus the red is the actual move to the downside, green is the actual move to the upside. So you see last quarter was predicting 4.2% move in either direction. The actual move was negative 5.9%. So that busted through that straddle. Up here, we see one to the upside. It was predicted on January 30th. It was expecting a 5.7% move in either direction. That move was up 6.3%. So that busted through the straddle to the upside. Here's how the straddle did. So remember, buying the option straddle, buying a call, buying put at the money. That was only a winner 25% of the time historically, for an average loss of 31%. Long strangle, that was a winner only 25% of the time historically, with an average loss of negative 58%. Credit iron butterfly, that's selling the straddle, buying the wings for protection. That was a winner 70% of the time for an average gain of 59%. Credit iron condor, selling the out of the money call spread, selling the out of the money put spread. That was a winner 75% of the time for an average gain of 29%. Before I move on, let's just take a look at what the implied volatility tended to do. So here we see implied volatility in Alibaba from the day before earnings, day after earnings, was down 15% on average. Average implied volatility. Now, this is looking at the 30-day constant maturity option, not the near term, not the nearest term option, but an option with 30 calendar days to go. Sorry, 30 trading days to go. Okay, so that the average implied volatility in that was 37.2 day before earnings. Day after earnings, the average implied volatility is 31.8. 5 days after, average implied volatility is 31.2. I see over here, calendar spread, selling the near term, buying the far. That was a winner 67% of the time for an average return of 40%. So that's doing the time spread. So I'm going to move on unless he had more a specific
That's
question.
good.
Yep. Let's take a look at, here's one that comes up. Let's take a look at bull put spreads. So these are popular. People who like to trade, credit put spreads. And this is with like a bullish outlook to maybe even like a neutral outlook, depending which strikes you're doing. So I'm just going to look for some bullish put spread ideas right now. And here's what we're going to do. I'm going to look for expirations that expire within the next 30 days. Okay. And as far as like stock ideas go, let's take a look at momentum stocks. So this is what I'm filtering out. Stock ideas. Let's look for momentum stocks. These are stocks that in the last 6 months, 3 months, 2 weeks have been making higher highs and higher lows. So we're looking for stocks with positive momentum. Okay, let me jump back here now. So as far as the spread goes, this is what we're going to do. Let's take a look for spreads with positive edge. So we want positive theoretical edge. I'm going to put at least 10%. In other words, based on historical data, today's prices look good in that spread, and we're looking at least a 10% theoretical edge. I'm going to take a look at historical win rate of above 70%. So historically, it's going through analyzing that spread and saying, based on the data, the prices today, the circumstances, that theoretically this would have been profitable at least 70% of the time or more. And let's take a look at the best ones let's do by theoretical edge. So this is what it's going to do. It's going to scan the entire market, and it's going to give me really quickly best ones by theoretical edge, considering all the other parameters we just set. So over here, Apple, it's telling us September 4th, selling the 460 put, buying the 455 put for $2.15. We think theoretically it's worth $1.39. That gives us 26.8% edge with a historical win rate of 73.9%. Apple's 460 right now. Microsoft, stocks 208.59, selling September 4th, selling a 207.5 put, buying a 202.5 put in that expiration for $1.70 credit. We think it's worth 62 cents. Remember, when you're getting a credit, you want to sell above. That's giving us a theoretical edge of 32.8% for his historical win rate of 87%. Facebook, stocks 261.37, showing up September 4th expiration, selling a 262.5 put, buying a 257.5 put for $1.95 credit. We think it's worth $1.28. Based on historical data, that gives us 21.9% theoretical edge with a historical win rate of 73.9%. I'm going to do another one because some people, they like to get a cushion. So let's make them a little bit more out of the money. So let's see best return if the stock is flat. So now I'm going to screen for, show me the ones where, oh, sorry, not best return, best cushion, best downside cushion. So these are ones that are more out of the money. It gives us a cushion in case that stock reverses. So the idea here is if the stock sits there, you're gonna make money. The stock goes up, you're gonna make money. Even if the stock goes down, as long as it doesn't break through those strikes, you're gonna make money. So you have some cushion to the downside, so you're expanding your range of prices that you could potentially be profitable. Here we go.
Are you saying you can be profitable 3 out of 4 ways?
Well, not exactly. It could go down. If it goes down enough, you will lose. I'll explain that. So you're not going to make money completely everywhere it goes. But if it stays the same, you're going to make money. If it goes up, yes. If it goes down because you're doing out of the money, you have some cushion. So right here in Apple, stocks 460. If you're in September 4th, you're selling the 445 put, buying the 440 put. As long as that stock stays above 445 by September 4th, you collect that credit, $1.35.
Nice.
So you have some cushion, 3.6%. It could go a little bit below 445 because you're still getting a credit of $1.35. So you kind of develop a little cushion right there at 3.6% if it goes against you. Okay, so that's what this is doing. If it goes below that, then you start losing. So there's your max loss, $3.65. So it's not gain no matter where it goes. You just expand the range of prices that where you could potentially win. Okay.
Excellent.
Here, if the stock stays above 445, your return on your risk is 37%. In other words, you're risking $3.65. To make $1.35. If everything goes okay, it stays above $445. Your return is 37% by September 4th. Was whatever, 3 weeks away, 2 weeks away in trading days. Anyway, Apple is telling us September 4th, selling 445 put, buying a 440 put, $1.37. We think for $1.35 credit, we think it's worth 87 cents. That's a 13.2% theoretical edge with a historical win rate of 82.6%. Microsoft, stocks 208.59. It's telling us September 11th, selling the 195 put, buying the 190 put, 71 cents credit. We think theoretically it's worth 15 cents. That gives us a 13.1% theoretical edge, historical win rate 97.1%. Facebook 261.37 closing price. It's telling us September 4th, selling the 252.5 put, buying the 247.5 put, $1 for $1.25 credit. We think it's worth 75 cents based on historical data. That gives us a 13.4% theoretical edge with a historical win rate of 84.8%. Here we go. Stock sits there, goes higher, stays above 152.5. That's a 33.3% return in the next 2-3 weeks. Here you get a 3.9% cushion to the downside, 6.9% cushion in Microsoft, 3.6% cushion in Apple. So that's really quickly credit put spreads. If there's no questions, I'm going to jump to unusual option volume.
No, go to unusual option volume.
Okay. So, all right, guys, I'm going to unusual option volume. This is from yesterday's close. Let's just take a look at the market. So I'm going to just do by highest market cap, like over 30 billion. So a couple ones here. Tesla, that traded, the options volume was 1.8 times its average daily volume based on the last 90 days. 70% of them were in the calls, 30% in the puts. Stock was up 4.3% yesterday. Implied volatility is in the 65th percentile rank. Let me just see. I think we talked about this was up today in the morning. iShares Gold Trust, we see that the options were traded 1.8 times its average daily volume yesterday. Still not that much, only 8,500 contracts, 89% in the calls, 11% in the puts. That implied volatility was up yesterday to the 86th percentile rank. Let me see if anything it's doing this morning, kind of unchanged. Apple, the options volume was 1.8 times its average daily volume yesterday. 71% of the volume was in the calls, 29% in the puts. That implied volatility is in the 77th percentile rank. It was up yesterday. Let's see, and I think Apple kind of unchanged, up 62 cents in the morning. So that's just really quickly kind of a big, what was happening in the higher market cap stocks in the unusual option volume. And sorry for going quickly. I was going to do one more screen unless you have questions coming up. I'll take a break.
We did have a question from Hot Potato Trader who was asking about a particular strike in BAC. Is that okay?
Okay. Yeah, sure. So let's jump to that BAC.
Yeah, let's go to the BAC options chain.
Okay.
All right. Sorry about this. It's
sure.
It was the BAC 821 strike.
821?
August 21, yeah.
Oh, August 21st expiration? Okay.
Yeah, strike 28. He's asking about that open interest. Does that look odd to you at all?
Well, I see 82,215 open interest. Yesterday traded 4,700 contracts. So, it's a 10-cent call. I mean, let's just take a look. He just wants this particular option.
Yeah, he's looking at that strike. Something popped up in his mind. He just wants to see inside your mind.
Okay. Well, here's what I see from the day before, till yesterday's close. It was, that option dropped from roughly 18 cents to 9 cents, 9 cents, 10 cents. Implied volatility ticked up a little bit, but the stock was down yesterday, 1.4%. This is where it traded yesterday on average. Volume weighted average price was 10 cents, a high of 15 cents, low 7 cents. This is the VWAP. I mean, it's an out of the money call, so how far away is it? It's 26. So you really needed the stock to pop in the next 2 days. I'll take a look at the performance tracker. So this is what the history of this option was, so from the beginning, it was started out at 41 cents. I see it went up, it was up here in the $2 range yesterday, That's where closed 9 cents, 10 cents. Here's the open interest. So it doesn't look like the open interest changed that much from yesterday to today, like a little bit of an increase. So you see it's been roughly in the 80s since August 10th. So I don't see anything like unusual there that pops out to me.
Gina, who's joining us for the first time, wants to look at the FSLY option chain, August 21, and she's looking particularly at the 77 strike puts.
August 21, this one?
Yeah.
Okay.
Thanks for joining us, Gina. I didn't
let
you know today. It's super important to give us a nice thumbs up on YouTube, and also subscribe to our channel. You get alerted. I know John was asking about if we have any other videos, and Dima did a great option basic webinar on Monday. If you're subscribed, you get alerted right when that comes out. So it's pretty cool to be a subscriber to the Market Chameleon YouTube channel. Sorry, D.
Yeah, and we did the option. We just started kind of with the basics to see how once we did the calls last Monday, just to go over what is a call option, give some like examples and analogies, and then we'll do the puts. I think the puts might be even a little. So I'm trying to prepare for that. See how to explain for what a put option is. To some of you might be boring, but we're trying to mix it up, do beginners, intermediate, and some advanced webinars. Well, what was the strike again?
It was the FSLY 821.77 strike.
77 put, this one?
Yep.
Okay. So, I mean, one thing just stands out. Just keep this market looks a little bit wide to me. You know, $2.80, 3.30, 50-cent wide market. Think about it, like in a $3 option, you have 50 cents wide. So, you know, that's a big percentage of the option price, right? So even going one way or the other, you know, 25 cents, you're moving from the midpoint. That's like your cost of execution. So be careful there. You know, so it's like almost, what is that? Almost 10%, 8% to get an immediate fill. So always try to get it like in between the markets or the midpoint. I don't see much trading in that option yesterday, and just like these 58 contracts, but let's just take a look at it from a historical perspective. Here's the put. So here open interest is 440, not much trading there, you know, not a lot of open interest. Here's the trade count. So this is what this, you know, it opened up at 9. The stock must have been going up this whole time because now it's like 280, 330. So from July 24th, this is what it did. It was as low as 70 cents. But, you know, I don't see any from at least trading perspective. I don't see anything that's, you know, that anything like that interesting. The options like, you know, 3.3% out of the money. Here I just see, you know, from a seasonality perspective, the stock tended to do well during this period from August 13th till expiration August 21st for 6-day hold, which is you're going to have 6 trading days here. The stock's like up 50%, was up 50% of the time, down 50% of the time. You know, average gain was 3.7%. Let me see. The average down move. I mean, is this stock relatively new? This is pretty volatile, but the average down move.
Jake just jumped in and he's like, I'm assuming Jake, who trades a lot, is saying there's not much liquidity in this product, and be careful.
Yeah, that's one thing I noticed, that these markets are very wide, you know, so you got to be careful here. You know, just when you're entering the orders, you know, just be aware of that these options are wide. You don't want to, certainly I wouldn't be sending market orders or trying to do anything like that in the stock, because that could be dangerous. Probably use limit orders and just, you know, some of these markets look like they're tightening up. What does this stock do anyway? Fastly. It operates edge cloud platform designed to support agile software development. I mean,
Sounds like a tech company to me.
yeah, yeah. It's like let's just take a look what this company, how it's been doing recently.
As Jake
So here,
says, getting filled will be time consuming, costly, and implies more risk.
in this, yeah, Jake knows, he knows everything. He's like, he knows all these stocks. Well, he's like studies this stuff 10 hours a day.
Yeah.
But this is how the last 3 months, it's been phenomenal. Like, 118%. It was up 6 months, 255%. Last month, it started to weaken, down 4.2%. 2 week, 13.9%. Yesterday, it was up 5%. So that's how, just a quick overview of this stock. But I don't see anything like
Well, I was going to say most players in the cloud space have benefited from people being at home for the last 6 months.
Yeah. So it's been good. Some companies are doing well under these circumstances. They've been big benefactors from the COVID. So that's that I don't have anything else that interesting about that particular option.
We only got about 5 minutes if you want to show one more thing.
Let me try to do this. I'm going to go to the open interest because I never do this one. And let's look at open interest by option contract. And here, these are just where, open interest increased or decreased yesterday on a particular option. And I'm going to use some filters here just to narrow this down. And let's take a look at where the open interest on a particular option was, up or down at least 1,000 contracts on the day. Let's take a look at where the open interest itself increased or decreased, like at least 10% of the average daily total volume in that option. I'm going to look at for calls. So let's just filter out calls for now. Let's look at option prices that are at least 25 cents or above. Or, we're going to filter out like any of these 0 to penny stocks. Let's take a look at the implied volatility in the option had to be up. So let's say like at least 10%. Let's do stock price. Let's do stock price above 25. So we're going to get out like the low price options we'll take out. So let's see, I still have, and let me see. I guess that's pretty good. Okay, so here we go. So in AMAT, we see a bunch of, so AMAT August 21 calls, 70 calls. We see, oh wait, did I say option price change? Let's see that the option price change was up. So implied volatility was up. The option price went up yesterday in that option. The open interest, went up by at least 1,000 or more, and the open interest change was at least 10% of the average daily volume. Does that all make sense? Hopefully. But here's one. ARNA stock 65.33, December 18, 70 calls. The option price yesterday closed at $8.95. That was up $2.15 on the day. Implied volatility in that option was up 13.5%. This is the volume, 1,600 shares. The open interest increased by 1,500, which added to the total open interest 2,600. So that made the open interest go up 145%, and that open interest is 300% of its average daily volume. So an average daily volume total is 500. Yesterday, just that option alone gained 1,500 contracts in open interest. So that's ARNA. Anyway, some upside call trading there. BLDR stocks 31.38. It was up 3.4% yesterday. Average daily option contracts is 500. On the September 18th 32 call, kind of at the money, that option was up 63 cents yesterday to close at 208 mid-market. Implied volatility on that option was up 10.5%. Open interest increased by 6,307 contracts on that line. That's 1,200% of its average daily volume. LPX 3189 closed yesterday, was up 1%. The average daily volume in that stock in those options is 992. The August 21 30 call, excuse me, that was up 25 cents yesterday to 208. The implied vol was up 95% in that option. Actually, here it looks like people were closing. The open interest declined, but we're ready to go, and I'm kind of losing my voice here.
You're doing a good
but we're
job.
ready for the opening bell.
Yeah. Yeah. Awesome job. Hey, everyone. Thanks for joining us. Very lively discussion on YouTube. Remember to subscribe to the channel. Thanks for joining us. We do have some questions that we'll try to get to Monday that were left out there. I'll get them in front of Dmitry. Everyone have a great weekend and stay safe out there.
Thanks everyone for joining, and hope to see you guys next show.
All right. Safe trading day, everybody.